Hi guys, this is Roshan here, and on behalf of Investantra, we welcome you to the series on mutual funds. We'll be taking you from the basics of mutual funds in the first video to much more advanced topics. Every video in this series will culminate in a screenshot that will provide you with the notes required for learning. Every investor at the beginning of his career is confused as to where exactly he or she should put his money. A famous question as I keep getting asked is, I have a lot of money but I've just put it in fixed deposits. This is exactly where the problem lies. Every beginner does not understand whether he should invest in stocks, whether currency markets are better for him, whether he should just stick his money in a bank or invest in treasury bills. It's just a whole big financial world out there for him. This is exactly where mutual funds come into picture. So, what exactly is a mutual fund? Let's take a look at that. A mutual fund is basically a professionally managed fund which collects money from many small shareholders or investors like you out there and then puts your money into certain asset classes. These asset classes and diversifications are determined by the fund managers. To explain this, let's get into a simple illustrative example. Now let's assume three different mutual fund teams. Mutual fund team C, funds team B and funds team A. Now each of these teams will be involved in a particular asset class. Funds team C might be involved in mixed debt and equity, and let's say funds team B is involved in debt funds while funds team A is in long-term equity. What this means is that each of the funds will take your money and the money of the other investors and pool these into diversified securities within that particular asset class. So a long-term equity would be the funds that are buying different stocks. Debt funds would buy different bonds, and the mixed funds would buy a combination of both. Now to select mutual funds, you assess graphs of theirs, and we are going to be doing this throughout the lecture series. So let's take a small illustrative example again of these graphs. Let's say team A has performed steadily over the past 5 years, while team B has had a bit of a problem showcasing good growth, while team C, with their phenomenal funds manager over the past 5 years, has showcased rapid growth. This is where a concept called net asset value (NAV) comes into play. You would obviously go with team C here, right? He's performed the best. But what you need to keep in mind is that's not the only criteria. Past performance is one of the important criterias. What you also need to assess is which fund is the fund manager associated with, what's the organization, and what is the asset class they invest in. So you need to assess what exactly holds potential for the future. Is it debt? Is it equity? Etc. So that's it from us in the first video. I'll see you in the next one. Don't forget to visit our website at www.investantra.com and follow us on all social media at Investantra.